5 proven strategies to get a business loan for your business. Look, if you're looking to get financing to grow your business, you want to watch this training because I'm about to give you 5 of my best strategies, not just get approved, but get approved for the most money at the best terms. So if you've ever been denied before, if you ever have not gotten as much money as you want to get, or you think there's no way you can qualify, well, I'm about to dispel all of those myths and give you the 5 proven strategies to help you get approved. We got a lot to cover, so let's dive in. So the first strategy has to do with knowing exactly why you're denied. Most business owners get denied for financing and have no clue why. And the vast majority of those denials happen because of something really simple called fundability. It's basically like the credibility of your business. And so lenders are looking at a handful of things that are very important to determine your credibility. First of all, do you have an entity set up, preferably an LLC or a corporation? Do you have an actual business name that doesn't reflect that you're in a high-risk industry? Meaning, do you know your industry NAICS code? And does that code indicate that you're in a high-risk industry? You don't want to be seen as high risk. 3, do you have a business address and phone number set up? A separate address, a separate phone number for your business, not your personal phone, not your mobile phone, not your personal address. 4th, do you have a website and an email address for your business? You don't want to use a Gmail and AOL. You want your email address to be congruent with the URL of your domain. And 5th, what other factors do you have that can give you credibility? Maybe a business license, maybe a business bank account, maybe a merchant account for your business. All of those things will tie in to give you the credibility you need to be able to get approved. But all of that is only one pillar of fundability. That's called the Fundability Foundation. And there's really 5 total pillars of fundability that you want to master in order to get approved. The second of which is business credit reports. Do you have business credit established with Dun & Bradstreet, Equifax, and Experian? If not, you should. First of all, business credit's an easy way for you to be able to fund your business. You're able to get it regardless of personal credit quality, regardless of cash flow, and regardless of collateral. It's money that anybody can get. And it accounts for about 85 to 90% of what you might need funding for. You're able to actually get through this really unique way to be able to finance your business. But just by having established business credit reports and scores, it also exponentially improves your ability to be able to get loans and credit lines as well. So you want to make sure that you improve your fundability foundation. You also want to make sure you build your business credit because those 2 are very important aspects to helping you get approved for business loans. But oftentimes those 2 aren't enough, which brings me to point number 3. You got to get your financials in order. Now, there's a few different types of financials that lenders are typically going to look at, the easiest of which is your bank statements. Make sure you're managing your bank account responsibly. Make sure you're not overdrawing the account. Make sure you have positive ending bank balances. By managing your bank account responsibly, that alone opens up all types of financing options for you. You're able to get merchant cash advances and revenue lending, for example, that are just based on you having proper bank account management for 3 to 6 months to get approved. There's credit lines at Fundbox, Bluevine, and other places that are primarily just looking at your revenue. Look, I can spend an hour just talking about ways you can get financing just based on bank account management, so make sure you do that part right. Now, if you have tax returns that show profits, that opens up even more funding options. Term loans, SBA loans become available as well. If you have P&Ls and balance sheets done, that opens up venture capital and opens up even more options for funding as well. So financials are very important, and the more detailed and the more financials you have, such as tax returns versus bank statements, the more financing options open up for you and your business. Now, the 4th of which is personal credit. Look, no matter what gurus tell you about building business credit and personal credit not being important, personal credit's important. If you want to get loans, if you want to get credit lines, if you want to get more approvals, more money, better terms, you need to work on your personal credit. They're going to look at things like your credit score, your utilization, when you start qualifying for harder to get loans. So make sure while you're dipping into these other options I'm talking about to be able to get financing for your business, like cash flow financing, make sure you're improving your business credit and your personal credit at the same time. Those 2 components will make it very important for you to be able to get maximum financing. And that brings me to 5. My 5th tip to get business loans for your business is to choose the right lender and product. Look, when business lenders lend you money, they're typically looking at 3 different things: cash flow, credit, and collateral. And the nice thing is only SBA and term loans look at all 3. A lot of alternative lenders only look at one of the 3. So you can use personal credit or business credit alone to get money. You could have cash flow and use just the fact that you have consistent cash flow to get financing. Or the third option is that you're able to use some kind of asset, maybe account receivables or vehicles or real estate or purchase orders 401ks, IRAs, stocks, bonds, inventory, any of those things can be leveraged as ways to be able to get financing as well. So never forget, you need all 3 C's to get SBA loans and term loans in most cases, but you only need one of the 3 to get financing through most alternative lenders. So by knowing the type of loan product you can qualify for, it makes it easier to find the right lender and to be able to get approved. So those are 5 of my best tips to get a business loan, but if you want access to even more financing options you can get right now, make sure you check out the link in the description to this training to grab my guide on 27 different ways to get money to grow your business. And while you're there, make sure you check out our link for our free finance assessment where we'll do a fundability check to help you get your Fundability Foundation built right so you have the best chance of getting approved, help you get your business credit reports and give you tips and tactics to quickly build your business credit. And we'll talk to you about like all the loans and credit lines you can get right now. You may qualify for a lot of financing you don't even know about, but a free finance assessment with our team will tell you all the money you're able to get right now. Did you get value from this training? If so, make sure you like and subscribe and keep your eye out for our next training where we talk about more cool ways to get the money you need to start and grow your business.